Welcome to Profiletraders. This is Reza and you're listening to my market analysis for Friday the 9th. Several days ago, when we were a couple of, I would say 100 plus points lower on the daily chart, I warned you that going into this earnings season, market might get extremely aggressive because every single dollar of gambling money comes into the market prior to earnings, especially if there is an oversold condition prior to the earnings, and then they usually buy it like absolute enraged animals going into the middle of October. So now we have two things in parallel into the market. One, of obviously the earnings gamblers that are pouring in money hands and fist, hoping that they're gonna make a buck or two upon the release of the earnings. And two, now the market has anticipated the absolute best case scenario in regards to the Federal Reserve as well, because about Thursday we had what you call a Federal Reserve minutes that came out, which is basically telling us what these 12 or 13 clueless, drunken, overpaid executives of the central banks, what did they discuss when they get together and drink $1,000 bottle of Bordeaux wine. And this time it happened that they were dovish. This time they were not hawkish, they were dovish, because these geniuses, these unbelievable minds, they figured out one thing that nobody knew, believe it or not, that the world economies are such that if they take the rates higher, they may cause further trouble. My goodness, how intelligent some can be. But then as soon as Friday, there was this conehead idiot by the name of Lockheed or Lockhart or whatever hell his name is, that came out and said that we may even take the rates higher in October. So in any case, everybody is laughing at these clowns. These clowns, instead of being paid $500,000 a year salary, sitting behind mahogany desks and leather chairs, they should be lead clowns in any traveling Romanian gypsy circus. That's where they belong. And as much as people have lost credibility towards this institution, it's becoming more and more comic how from day to day there is one of the watchdogs out there saying the complete total opposite of what Yellen said the day before, or some another bozo clown said the day before that. But for now, obviously, everybody knows that there is no rate hikes. There is not even the slightest chance nor a possibility of a rate hike. The only reason you will see a possible rate hike is because the Federal Reserve is in such a turmoil, is in such a drastic crisis that you and I are not aware of, and for whatever reason, probably because of the fact that they can't borrow a penny anymore at these rates, that they will be forced to push rates. But if it's done, it has nothing to do with the phony baloney crap that the economy is now so healthy that we need a rate hike. It has nothing to do with the phony baloney crap that they are selling to people with their 5.1% unemployment rate, that so finally we have reached full employment level, that now the Fed can go ahead and take the rates higher. None of that lie garbage is believed by anyone. If the Federal Reserve, on the back of such a disastrous bubble economy that they have created, must take the rates higher, is because simply United States is no longer able to borrow a dime at this current rate, and rates will be forced upon the Federal Reserve if they want to continue to finance growth through debt. But for now, we have anticipated both fantastic earnings and no rate hikes. And the result is obviously a parabolic move that has initiated itself from 1860 to where we are at 2006-05. And a long time ago, and I told you once we're going to reach between 12.15 to 12.30, it is going to be an extreme resistance, and we are at that level now. If there is the slightest hiccup in earnings or in regards to the rate hike, you can expect that we will delete this whole move up in a matter of 1 to 2 sessions. So we are at very, very critical level of resistance here, with the absolute best case scenarios anticipated into this market. So they better not be disappointed, or you're gonna see the mother of all selling coming into the market off of these levels. And if of course this orgy continues and this nirvana goes on, very clearly next level to look at is 250 or 2050, and once we break above 2050, we're gonna go delete entirely this last leg of a drop. For the very short time, the first level of support is 1999. Below that, I have absolutely no significant support but 1985 and then 1978.5. On the upside, 2015, past that 2030, and after that 2050, and then we are gonna go meet Moses up there at the top of the mountain. As far as crude, exactly what I told you was happening happened there as well. I said we were about to exit this triangle, that it was becoming a trend, and this was going to go first to 50, and if 50 wasn't going to be stopped, we were going to go to 55, where this last leg up would have been matched by the current leg going up. So we did pass through 50, but what we witnessed was a rejection, very clear-cut rejection below 50 with a close inside 50. So now it is a possibility that this break of 50 that failed will seal a short-term top at 51. And that this fake break above 50 with a return and a close below 50 could now be considered as a possible bull trap, meaning that the idiots that got involved into the market buying it above 50, now they are trapped, and not only they did not make money out of greed and stupidity of buying it up there, but now they're losing money. So as they are losing money, if they get a pushback up now to resistance of 50, they're probably gonna all bail out and pray to God that they did not get massacred. If we do not get a bounce from here to go to 50 to allow all those that are traps to exit, any further push down from here will become more and more aggressive, because those who are long from this structure here, we're gonna start to see their profit being chewed in. They're gonna want to bail out, and as they will bail out and price accelerates down, those who are trapped up there with a donkey hat on their heads, they will also be losing even more and more and more as we go down. So the push to the downside could become quite aggressive if we do not get a bounce first. So 50 is resistance 1, 49 support 1, 48.40 support 2, 47.75 support 3. Now let's take a quick look at gold. It's doing very fine, nothing wrong with it. Consolidated, broke up on breaking up. We had absolutely no retracement back below 1150. So something's wrong here. So 1150 is now support 1. As long as we remain above 1150, we are in the break up mode out of this very, very complex formation. First upside target should be to come and challenge 1170, and if 1170 doesn't reject but rather bring more buying interest on the way going up, we should definitely go tackle 1200, at which point it will encounter significant resistance. But this is a very unnatural thing that we have not seen for a long while, which is when the market rallies, somehow this time we did not see gold getting raped, violated, brutalized, and beat up. But this time instead, as the market rallied, this thing rallied up as well. This could be a combination of weakening of the dollar and a complete total lack and loss of confidence towards the Federal Reserve of this great United States of America. So chart is looking bullish. We should see 1160 first and then possibly 1200. Let's not forget that the extraction cost of an ounce of gold is $12.50. Let's not also forget that we are getting now into the strongest seasonal for gold. The seasonal demand comes from jewelry making for the holidays, Indian holidays, Chinese holidays. So this is the time of the year the demand for gold goes up the most compared to the rest of the year. So keep a close eye on 1150. We cannot cross below 1150 because if we do, then we are in trouble and we could go see 1135 and then 1130. But so far it is looking fine. This was Reza with Profiletraders. If you wish to learn market profile my way, you can get all my courses and get 1 year to my live trading room for $550. 30 days money back guaranteed. Thank you for listening, and to the next time.